First, before we get to the big names, give me a market thought. Doug?
I think that, we're only a couple of percent off from the all-time high. So coming up 25%, giving back a little bit is very normal. Usually have 3 to 4, 5% drops in a year. We finally had one, so that's great. But you have to be really careful what you're buying when you're touching back up on the highs again.
I see. Shah?
I like the action, obviously, yesterday and today, obviously, and right now we're just, I think, on the highs of the day, so that portends well. If we close up there, I think it's another positive. However, this is just obviously a Fed-driven move, and I think on the heels of the market being down only 6%, I didn't see the need for the Fed to step in. The economy is still doing very well. So this is another Fed put, and I think it's probably going to put the market a little further ahead than it should be right now. But if this continues, then we're in good shape.
So you don't see a need for the Fed to step in and do a rate cut? I mean, everybody's just, part of the reason the market, a lot of the reason the market's moving higher is because everybody's waiting for this rate cut.
Yeah.
You don't think it's the Fed fixing a mistake?
No, I don't think so. I don't think there has been a mistake. I look at the selling down of yields in the bond market, especially in the 10-year. That was a lot of traders buying the bonds, bidding them up, lowering the yields, and eventually the Fed and everyone is looking at that lower yields and say, does that portend recession? Fed comes in and there's the Fed put.
Right.
All those traders that had bought all those bonds, they probably sold into that rally.
Got it. Doug, you have a Fed thought?
98% chance, 98% chance of a Fed rate cut by the end of the year. I might be in the 2% that believe also that we don't need that. The economy is fine, but that's the expectation, and that's where we're at.
We should have just named this the optimistic hour. I like it. Okay, so let's get to some of these great companies that we know all so well. So let's start out with good old Nike. Shah, you say watch out when we get these earnings on June 27th.
Nike's got problems, particularly because of China. It's a producer in China, and it's also a retailer in China. I think the economy in China, we know, has been sliding a little bit, and I think that's affecting sales there. As a producer, in terms of what is coming out of China now and being sold back into the U.S., according to a couple of surveys I read, the expectation is for about a 27% increase in the price of Nikes in the United States. That's going to impact the stock. So I'm worried about Nike. Frankly, I'd like to see it go maybe up to 85. I don't think it can get to 87, 85, 87. I'd be shorting it. I don't think it's got enough headwind to move much higher than that. And I actually think it's probably got another 10, 20% to go on the downside.
Shorting it. Wow. Doug, you don't think so. You have a different outlook.
Look, they have double-digit growth in China. Their sports area in China is growing. That's a plus for them. The negative is that they're in China. So that's the problem for them on exporting and the problems here. So I think there is some upside there. I think maybe it could get a little bit higher than 85. So maybe I'd short it a little bit later than that. But I think that I think that there is a little bit of room there. There's some positives to it, but I do get a little bit nervous about their overemphasis on everything being in China. I'd much rather see them spread that out to other countries.
So if it runs up, then you would short it?
I would probably.
Would you buy it now until it goes higher? Or what do you say?
I think that long-term outlook for us is probably high 90s, and then I would probably steer clear of that, but you might short it.
All right, Lululemon. Doug, you're first. Lulu.
So Lululemon. I mean, look, how do you fight that trend? It's up 50-something%. It's up like 3.5 times from 5 years ago. Right. So the problem I have with it is, even though the outlook is still good, I have a hard time buying things that have that kind of momentum behind them and have already run that much. I much prefer things that maybe have yet to do that. Right. So while I think it's obviously killing it, it's doing a great job in its area and beating all the competitors, and the outlook is still good. I just worry about if I went into it, I would tread lightly. Is the way that I would do it.
Lulu?
I think management has basically laid out the path that they expect tremendous growth. The company has beaten over the last 8 consecutive quarters, it's the consensus estimates for earnings by about 19.9% over the last year. Those are huge beats. They've had 13 consecutive quarters of better than average trend growth in their sales. So everything they seem to be hitting it on all cylinders. And as far as what management is saying, they expect to double men's growth and digital growth, and then by 2023, and quadruple international sales by 2023. Those are tremendous aspirations. If they come close, the market's going to love it.
A quick thought on McDonald's.
Boring.
Yeah, slower growth than other competitors. I don't really see a lot of upside from here at this point.
A quicker thought on Disney.
Disney, I think it's good. I mean, it's killing it in its area. I think the outlook is still good for Disney.